Are we ready? Okay. Good evening. I plan to make a statement which is somewhat long because I want to cover what we intend to do over the next few months. I took charge this afternoon as the 23rd Governor of the Reserve Bank of India. I took charge this afternoon as the 23rd Governor of the Reserve Bank of India. This is not an easy time. The economy does face challenges. At the same time, India is fundamentally a sound economy with a bright future. Our task today is to build a bridge to the future over the stormy waves produced by global financial markets. I have every confidence we will succeed in doing that. Today, I want to articulate some first steps, concrete actions we will take, as well as some intentions to take actions based on the plans we will formulate. Before I turn to specifics, let me repeat what I said on the day I was appointed. The Reserve Bank of India is a great institution with a tradition of integrity, independence, and professionalism. I congratulate Dr. Subba Rao on his leadership in guiding the bank through very difficult times, and I look forward to working with the many dedicated employees of the RBI to further some of the important initiatives that he started. I've been touched by the warmth with which the RBI staff have welcomed me today. To the existing traditions of the RBI, which will be the bedrock of our work, we will emphasize two other traditions that become important in these times: transparency and predictability. At a time when the financial markets are volatile and there is some domestic uncertainty because of impending elections, the Reserve Bank of India should be a beacon of stability as to its objectives. That is not to say we will never surprise the markets with actions. A central bank should never say never. But the public should have a clear idea of where we are going and understand how our policy actions fit into the framework that we articulate. Key to all this is communication, and I want to underscore communication with this statement on my first day in office. Let me turn first to monetary policy. We will be making the first monetary policy statement of my term on September 20th. I have postponed the original set date a bit so that between now and then I have enough time to consider all major developments in the required detail. I will leave a detailed explanation of our policy stance till then. But let me emphasize that the RBI takes its mandate from the RBI Act of 1934, which says the Reserve Bank of India was constituted to regulate the issue of banknotes and the keeping of reserves with a view to securing monetary stability in India and generally to operate the currency and credit system of the country to its advantage. The primary role of the central bank, as these words suggest, is monetary stability, that is to sustain confidence in the value of the country's money. Ultimately, this means low and stable expectations of inflation, whether that inflation stems from domestic sources or from changes in the value of the currency, from supply constraints or demand pressures. I've asked Deputy Governor Urjit Patel, together with a panel he will constitute of outside experts and RBI staff, to come up with suggestions in 3 months on what needs to be done to revise and strengthen our monetary policy framework. A number of past committees, including the FSLRC, have opined on this, and their views will be considered carefully. I talked about the primary role of the RBI as preserving the purchasing power of the rupee, but that is not its only role. We have two other important mandates: inclusive growth and development, as well as financial stability. As the central bank of a developing country, we have additional tools to generate growth. We can accelerate financial development and inclusion. Rural areas, especially our villages, as well as small and medium industries across the country, have been important engines of growth, even as large company growth has slowed. But access to finance is still hard for the poor and for rural and small and medium industries. We need faster, broad-based, inclusive growth, leading to a rapid fall in poverty. The Indian public would benefit from more competition between banks, and banks would benefit from more freedom in decision-making. With this in view, the RBI will shortly issue the necessary circular to completely free branch banking, or I should say completely free bank branching, for domestic scheduled commercial banks in every part of the country. No longer will a well-run scheduled domestic commercial bank have to approach the RBI for permission to open a branch. We will of course require banks to fulfill certain inclusion criteria in underserved areas in proportion to their expansion in urban areas, and we will restrain improperly managed banks from expanding until they convince supervisors of their stability. But branching will be free for all scheduled domestic commercial banks except the poorly managed. There has been a fair amount of public attention devoted to new bank licenses. The RBI will give out new bank licenses as soon as consistent with the highest standards of transparency and diligence. We are in the process of constituting an external committee. Dr. Bimal Jalan, an illustrious former governor, has agreed to chair it, and the committee will be composed of individuals with impeccable reputations. This committee will screen license applicants after an initial compilation of applications by the RBI staff. The external committee will make recommendations to the RBI governor and deputy governors, and we will propose the final slate to the committee of the RBI Central Board. I hope to announce licenses within or soon after the term of Deputy Governor Anand Sinha, who has been shepherding the process. I remind you his term expires in January 2014. We will not stop with these licenses. The RBI has an excellent document on its website exploring the possibility of differentiated licenses for small banks and wholesale banks, the possibility of continuous or on-tap licensing, and the possibility of converting large urban cooperative banks into commercial banks. We will pursue these creative ideas of the RBI staff and come up with a detailed roadmap of the necessary reforms and regulations for freeing entry and making the licensing process more frequent after we get comments from stakeholders. India has a number of foreign-owned banks, many of whom have been with us for a long time and have helped fuel our growth. They've been in the forefront of innovation, both in terms of improving productivity as well as in terms of creating new products. We would like them to participate more in our growth, but in exchange, we would like more regulatory and supervisory control over local operations so that we are not blindsided by international developments. The RBI will encourage qualifying foreign banks to move to a wholly owned subsidiary structure where they will enjoy near-national treatment on a reciprocal basis. We're in the process of sorting out a few remaining issues so that this move can be made. Finally, our banks have a number of obligations that preempt lending and in fact allow what Dr. Rakesh Mohan, an illustrious former deputy governor, called lazy banking. One of the mandates of the RBI in the Act is to ensure the flow of credit to productive sectors of the economy. In this context, we need to reduce the requirement for banks to invest in government securities in a calibrated way to what is strictly needed from a prudential perspective. This cannot be done overnight, of course. As government finances improve, the scope for such reduction will increase. Furthermore, as the penetration of other financial institutions, such as pension funds and insurance companies, increase, we can reduce the need for regular commercial banks to invest in government securities. We also subject our banks to a variety of priority sector lending requirements. I believe there is a role for such a mandate in a developing country. It is useful to nudge the banks into areas they would not otherwise venture into. But that mandate should adjust to the needs of the economy and should be executed in the most efficient way possible. Let us remember that the goal is greater financial access to all parts of the country rather than meeting some bureaucratic norms. I'm asking Dr. Nachiket Moore to head a committee that will assess every aspect of our approach to financial inclusion to suggest the way forward. In these ways, we will further the development mission of the RBI. Some see financial markets as competition to banks. They are that, but they're also complementary. Too many risks in the Indian economy gravitate towards commercial banks, even when they should be absorbed by arm's-length financial markets. For our financial markets to play their necessary roles of providing risk-absorbing long-term finance and of generating information about investment opportunities, they have to have depth. We cannot create depth by banning position taking or mandating trading based only on well-defined legitimate needs. Money is fungible, so such bans get subverted, but at some level all investment is an act of faith and of risk-taking. Better that investors take positions domestically and provide depth and profits to our economy than they take our markets to foreign shores. So together with the government and regulators such as SEBI, we will steadily but surely liberalize our markets, as well as restrictions on investment and position taking. Given the current market turmoil, our actions will be at a measured pace. But as a symbolic down payment, we will do the following. First, presently exporters are permitted to rebook cancelled forward exchange contracts to the extent of 25% of the value of cancelled contracts. This facility is not available for importers. To enable exporters and importers greater flexibility in their risk management, we will, 1, enhance the limit available to exporters to 50%, and 2, allow a similar facility to importers to the extent of 25%. Second, to develop the money markets and the GSEC markets, we will introduce cash-settled 10-year interest rate futures contracts. Third, we will examine the introduction of interest rate futures on overnight interest rates. Let me turn to rupee internationalization and capital inflows. This might be a strange time to talk about rupee internationalization, but we have to think beyond the next few months. As our trade expands, we will push for more settlement in rupees. This will also mean we will have to open up our financial markets more to those who receive rupees so that they can invest it back in. We intend to continue the path of steady liberalization. The RBI wants to help our banks bring in safe money to fund our current account deficit. We have been receiving requests from banks to consider a special concessional window for swapping FCNR deposits that will be mobilized following the recent relaxations permitted by the Reserve Bank of India. We will offer such a window to the banks to swap the fresh FCNR-B dollar funds mobilized for a minimum tenor of 3 years and over at a fixed rate of 3.5% per annum for the tenor of the deposit. Further, based again on requests received from banks, we have decided that the current overseas borrowing limit of 50% of the unimpaired Tier 1 capital will be raised to 100%, and that the borrowings mobilized under this provision can be swapped with the Reserve Bank of India, again the dollar money, at the option of the bank at a concessional rate of 100 basis points below the ongoing swap rate prevailing in the market. The above schemes will be open up to November 30th, 2013, which coincides with when the relaxations on NRI deposits expire. The RBI reserves the right to close the scheme earlier with due notice. Let me turn to financial infrastructure. Finance thrives when the financial infrastructure is strong. The RBI has been working hard to improve the financial infrastructure of the country. It has made tremendous advances, for example, in strengthening the payment and settlement systems in the country. Similarly, it has been working on improving information sharing through agencies such as credit bureaus and rating agencies. I propose to carry on such work, which will be extremely important to enhance the safety and speed of flows, as well as the quality and quantity of lending in the country. On the retail side, I particularly want to emphasize the use of the unique ID, Aadhaar, in building individual credit histories. This will be the foundation of a revolution in retail credit, and we will do everything we can to help it. For small and medium firms, we intend to facilitate electronic bill factoring exchanges, whereby MSME bills against large companies can be accepted electronically and auctioned so that the MSMEs are paid promptly. This was a proposal in the report of my Committee on Financial Sector Reforms in 2008, and I intend to see it carried out. Finance is not just about lending, it's about recovering loans also. We have to improve the efficiency of the recovery system, especially at a time of economic uncertainty like the present. Recovery should be based on efficiency and fairness, preserving the value of the underlying valuable assets and jobs where possible, even while redeploying unviable assets to new users and compensating employees fairly. All this should be done while ensuring that contractual priorities are met. The system has to be tolerant of genuine difficulty while coming down hard on mismanagement and fraud. Promoters do not have a divine right to stay in charge, regardless of how badly they mismanage an enterprise, nor do they have the right to use the banking system to recapitalize their failed ventures. Most immediately, we need to accelerate the working of debt recovery tribunals and asset reconstruction companies. Deputy Governor Anand Sinha and I will be examining the necessary steps. I've also asked Deputy Governor Dr. Chakravarti to take a close look at rising NPAs in the restructuring/recovery process, and we will be taking steps shortly. The RBI proposes to collect credit data and examine large common exposures across banks in much greater detail than we do now. This will enable the creation of a central repository on large credits, which we will share with the banks, enabling the banks themselves to be aware of building leverage and common exposures across the system. While the resumption of stalled projects and stronger growth will alleviate some of the banking system difficulties, we will encourage banks to clean up their balance sheets and commit to a capital raising program where necessary. The bad loan problem is not alarming yet, but it will only fester and grow if left unaddressed. We are also following the FSLRC suggestion of setting up an enhanced resolution structure for financial firms. The Working Group on Resolution Regimes for Financial Institutions is looking at this, and we will examine its recommendations and take action soon after. Let me turn finally to households. Everyone has a right to safe investment vehicles, to the ability to transfer remittances to loved ones, to insurance, to obtain direct benefits from the government without paying costly intervening intermediaries, and to raise funding for viable investment opportunities. In addition, access to credit to smooth consumption needs or to tide over emergencies is desirable, especially for households in the lower income deciles, when it does not impose unserviceable debt loads. The Reserve Bank will continue to play its part in making all this possible. In particular, I want to announce a number of specific actions. First, households have expressed a desire to be protected against CPI inflation. Together with the government, we will issue inflation index savings certificates linked to the CPI new index to retail investors by end November 2013. Second, we will implement a national gyro-based Indian bill payment system such that households will be able to use bank accounts to pay school fees, utilities, medical bills, and make person-to-person transfers electronically. We want to make payments anywhere, anytime a reality. Third, only banks are currently allowed to deploy point-of-sale terminals, and these are largely set up by a few banks in urban areas. As announced in the annual monetary policy statement, we will facilitate the setting up of white point-of-sale devices and mini ATMs by non-bank entities to cover the country so as to improve access to financial services in rural and remote areas. Fourth, currently holders of prepaid instruments issued by non-bank entities are not allowed to withdraw cash from outstanding balances in their prepaid cards or electronic wallets. Given the vast potential for such instruments in meeting payments and remittance needs in remote areas, we intend to conduct a pilot enabling cash payments using such instruments and Aadhaar-based identification. Finally, there is incredible potential for mobile-based payments. We will set up a technical committee to examine the feasibility of using encrypted SMS-based funds transfer using an application that can run on any type of handset. We will also work to get banks and mobile companies to cooperate together in rolling out mobile payments. Mobile payments can be a game changer both in the financial sector as well as for mobile companies. This, in short, is my short-term timetable for the Reserve Bank. It involves considerable change, and change is risky. But as India develops, not changing is even riskier. We have to keep what is good about our system, of which there's a tremendous amount, even while acting differently where warranted. The RBI has always changed when needed, not following the latest fad, but doing what is necessary. I intend to work with my excellent colleagues at the Reserve Bank, the senior management of which is represented around this table, to achieve the change we need. Finally, a personal note. Any entrant to central bank governorship probably starts at the height of their popularity. Some of the actions I take will not be popular. The governorship of the central bank is not meant to win one votes or Facebook likes. But I hope to do the right thing, no matter what the criticism, even while looking to learn from the criticism. Rudyard Kipling put it better when he mused about the requirements of an ideal central banker in his poem, If you can trust yourself when all men doubt you, but make allowances for their doubting too. End quote. Kipling's reference to men only dates these lines, but his words are clear. We will fill in the details of what I have announced shortly and lay out a broader roadmap of reforms soon after. Appropriate notifications will be issued shortly again. As this is underway, we will turn to preparing the mid-quarter policy statement. Thank you very much for your patience in listening.
So will you take some?
We will give the statement in a little while, and it will also be on the RBI website. We will take a couple of questions. Please introduce yourself and then ask your question. Anirudh?
Good afternoon. Anirudh here from ET now. There's a lot of interest in finding out what your stance is going to be. Is it going to be anti-inflation? Is it going to be pro-growth? So I know it's still early days to understand that, but if you could just kind of give us a hint as to where would be your main priority? Would it be controlling the rupee's value? Would it be growth, or would it be inflation?
As I said, we will make everything clear with the monetary policy statement on the 20th. I don't want to prejudge that statement.
Ritesh?
Dr. Rajan, this is Ritesh here from Z Business. So at this point in time, we are actually going through a very tough time in terms of growth, and markets and public at large is actually looking at the economy in a very dull mode, and a lot of pessimism is there in the market. What would be your message to markets and people at large who are actually looking into pessimism? You sound very optimistic in your speech.
Well, I think we have proposed a bunch of reforms which I have every intention, I think, to enhance growth. And I think, there are so many low-hanging fruit in the economy that if we only pluck them, we can accelerate growth substantially. I think there are some positive developments in the economy going forward which will also help, for example, the good monsoon. But I think that we don't need to sit still and wait for developments to run their course. We can also take part in enhancing the growth process. I hope what we have announced today will give some measure of things that we can do. And we'll obviously explore more ways that we can enhance growth. But my sense is that, we certainly don't need false optimism. But I think there is good reason to believe that the medium-run future of the country is strong, and we have, as I said initially, to create the bridge towards that medium run, which means let's put in place the kinds of reforms which will both signal to our own people, but also to the outside world that we have confidence in this economy, that all the sort of doom and gloom is probably overdone, and that we can, in a sense, go back to the stronger growth, but also financial stability, financial market stability that we deserve.
Prashant?
So hi, Prashant Nayak from NDTV. Congratulations first up. You've got an ambitious list in front of you. I just want to start by asking you, the RBI policy, monetary policy has been scheduled to after the Fed meeting. There's been sort of a rescheduling in that sense. How important is going to be what the Fed does in terms of its decision to reduce bond purchases, etc.?
Well, I think certainly Fed announcements and the effects on markets that we've seen are important, but they're not the only international development that will take place between now and then. So we will monitor all developments, including domestic developments that we need to take into account in announcing the monetary policy statement.
So just one more. You said promoters don't have a divine right to stay in charge. Are you going to be critical of the leeway that the RBI over the last couple of years has given promoters and corporates in restructuring debt, etc.? I mean, without much reason, except the fact that times are pretty tough. Are you going to be taking a critical view of that?
We have to be careful about not injecting more uncertainty into the economy than it can handle. So we have to take this in a measured way. The more important point is that equity has to come from the promoter. Equity cannot come from the banks. So there has to be risk-absorbing capital. Over time, we have to make sure more of the equity comes from the promoter rather than from the banking system itself.
Just one last point. Just to go on to what Anirudh asked you earlier about growth and inflation. I know it's not as black and white as it seems. I'm sure you want growth. But, I mean, how would you describe what the RBI has done recently? And to put it in a different way, are you going to sort of continue on that path, or should we expect something drastically different?
No, you're asking me the same question, and I'll give you the same answer. Wait for the monetary policy statement. I'm not going to comment on past policies, but let's look at the monetary policy statement when it comes out, and you will get all the answers to your questions.
So you said about remittances and just one more, man. Last one.
Not done. No, please.
Oh, sorry.
Governor.
So, Governor from Economic Times, is this your version of the big bank like the Bank of Japan, or what to say on the day one when you wanted to convey some message? And then the second one is that you said the changes involve risk. What are the risks? You have seen risks all along. So what are the risks that you see in taking your program ahead?
Well, first, this is not my version of Big Bang. This is our collective sort of effort. You can see that some of what I've announced are developments that have been put forward by the RBI that has been in the works. But in a way, one of the points I want to underscore is there's been a lot of developments over time, both from the government side as well as the RBI side over the last year or more. And some of those developments get lost because they come sequentially. And then people say these are small changes, etc. But when you put them together, they seem significantly more. And to some extent, of course, today I think we are making some very big changes. But I think when you put all of this together, this is a big initial package. We intend to do more, but it is a big initial package or a down payment. And so I would like both domestic audiences as well as international audiences to see that a lot is being done, not so much in any kind of panic or any kind of excessive concern about a situation. And I would not use the word crisis in India in the same breath other than in this sentence. We are very far from anything that has happened to other countries over time. We are a very stable, very solid economy. There's no reason to be down. Yes, we are going through challenging times. Which country is not? But we will overcome these challenges. So one of the points here was to bring together a number of actions so that you could see that when aggregated together, there's a substantial amount. And I think if you go back to see what the RBI has done, what the government has done over the last year and a half, you'll find a substantial amount of work that has been done. And, pointing to a few sort of stray policies and taking them out of context, it looks like we don't know what we're doing. But absolutely there's a plan, and this plan is being followed. And we hope that what we intend to do over the next few months is really clear.
Follow-up to that. I can ask you. In the sense, you spoke about the risk, and you also mentioned about these subsidization of foreign banks and the debt restructuring. Okay, some of the things have been in the work since 2005. The problem is when it comes to implementing any of this. So how is that you are going to handle this implementation, and what are the risks associated with implementing this?
Well, I announced only the policies we will implement in the next few months. So we're not talking years, we're not talking many months, we're talking some of these will be done in the next week or so. Some will be next few weeks. These are all policies that have full agreement within the RBI. The issue is really to dot the I's and cross the T's. So there is no question that it will be implemented. In terms of risks, the risk with any change is the potential that we haven't seen the full consequences of that change. That is true of any change that is proposed. I think we deliberate very carefully about all the changes that we have been proposing. and therefore this is a consequence of deliberation. I mean, you don't see the policies that we ruled out because we were not comfortable with them. So you see what is presented today is what there is consensus on within the RBI. And so that sense I feel comfortable that we're not taking undue risk.
Okay, one last question, Parnika.
Sir, recently some international rating agencies have flagged, they have reiterated their chances of possible sovereign rating downgrade. And also another threat is of the quantitative easing that could start as early as this month. So these two things, how do you think that could make things more worse for the banking system, the financial markets, and the rupee in India?
As far as I understand, S&P merely reiterated what has been its long-standing claim about there being a one-third possibility of a rating downgrade, and one-third over a long period, something like a year or so. I don't know the precise phrasing. That is something to do with where we are. It's not something new. It's a statement made by S&P. And given the kind of rating they've given us, the associated probability is also relatively fixed. So I wouldn't read too much into that statement. Obviously, given higher oil prices and so on, we have to be somewhat careful about government finances. But I wouldn't read more into the S&P statement than that. On the second question, which was tapering. Well, obviously, we are paying attention to that. We have seen that financial markets do get very volatile when those issues come up, and we will take actions as appropriate to deal with the consequences if and when it is announced. There are many last questions. I think we should stop. Thank you. Thank you.